Hello, everybody, and welcome to my top stock to buy in the month of February. Now, this goes along with my asymmetric portfolio and the stocks that I actually sent out the email what I was buying for the month of February yesterday that went to all my premium subscribers on the newsletter. So if you want to be part of that, there's a link on the screen and a link in the show notes. What is the top stock to buy in the market today? I think the 60% plus drop in shares of HIMSS and HERS is absolutely insane given the momentum the company has, the platform that it's building in healthcare, the fact that we know that labs have been launched, we know that longevity products like peptides are coming in 2026. There are so many tailwinds behind this business. And the real story about HIMSS and HERS is about disruption. It's not about doing the same thing that everybody else is doing. I'm going to explain exactly what I mean by that in this video by comparing Roe, which is getting a lot of attention right now for having some of the weight loss medications, the pill forms that just came out for GLP-1s. HIMSS and HERS doesn't have access to those, but I'm going to show exactly why the HIMSS and HERS is still a much better deal for users and is more disruptive to the healthcare industry long term. If you want more from me, check out my newsletter, Asymmetric Investing. There's a link on the screen and a link in the show notes. That's where I'm building my asymmetric portfolio. I buy stocks once a month, track that performance over a long period of time. You can see from this chart here, that portfolio is beating the market by a sound margin, despite the fact that it's been a rough couple of months because stocks like HIMSS and HERS have had a huge pullback. But long term, we want to just be accumulating stocks like this at these kind of attractive prices. I also want to thank this video sponsor, Fiscal AI. If you go to fiscal.ai/ASYM, you can try out their product for free for 2 weeks. If you like what you see and become a paying subscriber, that link will get you 15% off. I'm going to use Fiscal AI throughout this video. Absolutely the best platform that I've ever used for doing fundamental research on stocks. It's got all the information you need right in one place, and you can make phenomenal charts when you want to communicate an investment thesis with somebody else. So let's dig right into HIMSS and HERS. Just to give some headline numbers here, $6.8 billion market cap. So we're talking about a business that's trying to disrupt a $400 billion pharmaceutical industry. That's just the pharmaceutical piece of things. That's not other pieces of the healthcare industry. So the upside potential is obviously huge for HIMSS and HERS if they get the business model right. Enterprise value to sales, 3.3. That's pretty cheap for a company that has a 71% growth rate over the past 3 years, 76% growth rate over the past 5 years. I'm not predicting that that's going to be the growth rate over the next 5 years, but even if a company is growing 20, 25%, that's how you actually get 10x returns. I went back and looked at a lot of the companies that have done 10x returns over the last decade. Their growth rates are typically between 20 and 25%. Companies typically can't grow 30+% for that long period of time because the numbers just get so big. HIMSS and HERS still has a ton of growth runway ahead. I also love some of the operating trends. So what we've got here is this kind of light tan column is total revenue. So you can see total revenue growing at that 70+% rate, even over the past year, despite the fact that there's a lot of complaints about HIMSS and HERS growth rate slowing. Yeah, it's slowing to a 78% growth rate over the past 12 months. That'll probably be a little bit lower than that in the fourth quarter and in the first quarter, but I'll talk about what that future looks like in just a second. And then we've also got improving operating margins. So they're now a profitable company. They're sustainable. They actually raised about $1 billion last year to invest more in the tools that they need to become that disruptive force. Things like artificial intelligence, things like acquiring suppliers. So I think long-term, when you're building that story about what does this company look like long-term, this is the disruptive story. But I want to use GLP-1s as an example of how HIMSS and HERS is thinking about things differently. And the thing I want you to think about is insurance. So typically in healthcare in the US in particular, everybody has to be covered by insurance. And so everybody wants things to be covered by their insurance that they pay for. Now, the problem with that is even if you're covered by insurance, a lot of your initial spending falls under your deductible. So you may have a $5,000 deductible, you may have a $10,000 deductible. Things like weight loss treatments are typically not covered by insurance. They may go towards that deductible, but if you're going to spend $5,000 a year on a weight loss treatment, you're going to probably pay for that out of pocket, even if it's covered by insurance, as they would say. So let's just look at how HIMSS and HERS is treating things differently, because management has talked about this over and over. They are living outside of the insurance ecosystem because it brings in a whole bunch of overhead and costs that they just simply don't want to deal with. So if you're going to disrupt the status quo, you have to do things differently. They are operating their business. They're building their entire business outside of insurance because that just makes everything more expensive. So let's show exactly how that works. This is the HIMSS site. So where you have a bunch of options for weight loss treatments, and you can go down here and you can go to what some of their options are. So you got kind of the branded options, $2,000 a month or so. And then you can go to things like compounded GLP-1s, starting at $200 a month for a 6-month plan. Oral medications, $69 a month for a 10-month plan. Now with HIMSS and HERS, that's all you pay. There's no membership fee. There's no other costs involved. This gets you access to their 24/7 consultations on the app. They'll help you track your weight, all kinds of things that come with this monthly plan that you typically pay for kind of ahead of time. If you're doing a 6-month plan, this is going to be $1,200 up front. That's the way that works. Ro, which is getting a lot of attention because they have the GLP-1 pills as an option, so much more attractive than sticking a needle in yourself once a week, or even sometimes more often than that. They have gotten a lot of attention recently for that product launch. But look at the way that their business model works. So they actually do take insurance, dedicated insurance concierge, you can see over here. There's a lot of information on these pages about how they work with insurance. But look at the added costs. Your membership is going to be $45 a month for the first month. Ongoing, it's $145 per month. Every month, $145, and that doesn't even get you anything. After you pay that $145 a month, then you could potentially pay $150 a month or $200 to $300 after an initial period for something like the Wegovy pill. So the Wegovy pill, we're talking about $350 to $450 per month to get access to that pill through Ro. Through HIMSS and HERS, you're talking about a fraction of that price. And how can they do that? The reason that they can do that is they don't have to spend all this time and energy thinking about insurance. A huge part of the Ro website is talking about, hey, we handle the insurance stuff for you. There's costs that go into that. There's real manpower that goes into that. And that's why you pay this price for ongoing support for your membership to a company like Ro. So again, you go back to HIMSS and HERS, and this is their products that they have out right now: weight loss, ED, hair loss, and then testosterone. These are products that don't come with a membership fee. At least that's not an option yet. These are not products that take a membership fee. These are not products that are offered through insurance. But that means that they don't have to pay for that membership fee. That's the cost of accepting insurance, is the entire ecosystem becomes more expensive. This is, again, fundamentally why HIMSS and HERS is building a disruptive product, and something like Ro is just slotting into the existing ecosystem. When you're looking at companies that have 10x, 100x potential, you want to be in a disruptive position. You don't want to be just slotting in doing the same thing that everybody else can do. So what else is disruptive about HIMSS and HERS? The lab testing is, I think, something that is really going to be foundational for their growth in the future. This is something that I did late in 2025. When this first came out, I did their advanced lab testing, get about 100 different biomarkers. Those results started coming in hours after I took my initial test. So now I have a baseline. I'm going to get tested again. I'll do the labs again in 6 months. We'll see how my health has changed. They also offer a bunch of different options to help improve some of your biomarkers. So I think what this is ultimately going to do is it's going to start creating an ecosystem where HIMSS and HERS is going to be basically your medical records on an ongoing basis. So what do your labs look like? If you have something like a digital scale, it can import that information from your digital scale. I'm wearing a Garmin watch, it could upload my heart rate, how I'm sleeping every night. Again, you're building a healthcare ecosystem and all the tools and products that go along with that. And the labs are a big piece of that. The thing that they can do with labs is they're starting to lay the foundations for some of these next generation products. And I'm talking about peptides. Peptides is something that we know is coming from HIMSS and HERS. They acquired a peptide facility in 2025. So they're bringing a lot of that manufacturing in-house. A lot of the peptide market currently is in kind of a gray market. So you don't know exactly what you're getting. So they're going to be one of the first manufacturers at scale that's actually going to bring these products to market. We don't know exactly which products they're going to bring to market, but when they do, they're going to have the lab infrastructure, they're going to have the care infrastructure, the artificial intelligence tools to educate consumers. All of this is going to be a game changer for HIMSS and HERS long-term. Again, they're building a healthcare ecosystem outside of traditional insurance. That's what's so important to understand about HIMSS and HERS. And then if we go back to the financials, the proof is in the pudding. There's concern right now that the growth rate for HIMSS and HERS is slowing, and it is coming down just a little bit. Let me show this on a quarterly basis. You can see that the growth rate, down to 50% in the most recent quarter. Yes, this growth rate is going to come down a little bit. You have crazy comps, even going back to the fourth quarter of 2024. So look at March 2025. That was the last quarter that they had GLP-1s on shortage, so they were able to sell a little bit more at scale. That's going to be a really tough comp for the first quarter of 2026. But the important metrics are all trending higher. So the blue here is monthly online revenue per average subscriber. So how much is each subscriber spending each month? This is going to be a little bit volatile, like I said, because of the impact of GLP-1s. We're spending now about $80 per month. The number of subscribers continues to increase. We're now at about 2.5 million subscribers. So what does this business look like when it gets to even more scale? When we have 10 million subscribers, maybe 15, 20 million subscribers, and they're getting their labs done on an ongoing basis. And now HIMSS and HERS has their medical records, has their entire history, how their health has improved or maybe deteriorated over time. They can start offering early screenings for things that you may be at high risk for. Again, all of these things are in the future, but this is what you have to think about as an investor, is not what does HIMSS and HERS look like today? What is next quarter going to look like? It's what does the next 5 years look like? What does the next 10 years look like? And the fact that HIMSS and HERS is building outside of the traditional healthcare ecosystem, the fact that pharmaceutical companies see them as such a threat, the fact that they're advancing in labs, they're building artificial intelligence tools, all of this is great news for investors, and you're getting this at a steal of a price today, I think. Look at the enterprise value to sales. This is one I stick to because this doesn't include profitability, but this is just 3.3. Let's look at some other high growth companies. Palantir trades for 88 times sales. So this is about 40 times higher than HIMSS and HERS today. Tesla is a manufacturing company. They trade for almost 17 times sales. So more than 5 times higher than where HIMSS and HERS is trading today. The three things that you want in any investment that has the potential for asymmetric returns is revenue growth, margin expansion, and the opportunity for multiple expansion. So enterprise value to sales, price to earnings multiple, you want to buy those at reasonable multiples so that those multiples can go up as the company grows. HIMSS and HERS has all three of those things in spades. That's why I'm adding more in February, and this is one of the top stocks that I'm holding in the asymmetric portfolio. HIMSS and HERS has been a detriment to that portfolio over the past few months. The stock has come down. But long term, I think this is going to be a phenomenal buying opportunity. 2026, I think, is going to be a year where we're going to see a lot of progress from HIMSS and HERS, and this disruption is going to continue from the company. But let me know what you think about HIMSS and HERS stock. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.